Interestingly enough, you've worked in Russia, Germany, Singapore, and now in the US. So I'm kind of curious to understand what are some of the patterns you've seen in these different continents.
Those ecosystems were evolving very rapidly, going through different cycles.
As a founder, would you say building in these economies is difficult when you compare it to the US?
I think let's put it this way. I don't like constraint driven thinking. I like more opportunistic driven thinking. Building playbook meaning majority of cases saying no to certain type of customers.
But doesn't it come against the opportunistic approach?
No, the thing is that I like McKinsey's 3 horizons mindset to set within the team. Let's imagine that you're going on a hike on a hill. The first horizon is, and with each step, you look and you see like there is obstacle. There is a tree, there is some, I don't know, like pivoting on a trail or something like that. This is your first horizon. Second horizon is like, let's say you see the top of the hill. So you know where you're heading. It's visible. You can describe what it's there. Third horizon is what you're going to see from the top of the hill.
Do you have any tips for founders when they are raising from a generalist VC and when raising from a ConTech, RealTech VC?
I think one of the important parts about raising money is...
In this episode of Constructing Tomorrow, we have Alexey Dubov. Alexey is the founder of BuildTech VC. BuildTech VC is a venture arm that specializes in backing ConTech and RealTech startups. In this episode, we discuss patterns observed when building companies in different continents, why cultural differences and local go-to-market playbooks matter when scaling between regions, what deal structure and sales cycles look like in construction tech, how Mckinsey's 3 horizons model work, how should founders craft a bold vision and iterate story to different type of VCs, how can founders build ecosystems, and much more. With that said, I bring you Alexey. Hi Alexey, thanks for being here and welcome to the podcast.
Hi, Siddharth.
Super excited for this one. And let me start off here. You have such an impressive portfolio and your professional career. You have your background in manufacturing and robotics. You founded 6 companies, 2 successful exits, and currently the CIO of Mighty Buildings. And you also have BuildTech, which is your VC firm, which you run on the side. So for someone who has no idea what PropTech, RealTech is, give a quick rundown of what it is.
First of all, I prefer not to use the word PropTech.
Why is that?
And I think I was one of the earliest who kind of like was negative about the PropTech term, saying because whenever I was saying like, no, we do construction technology, they're like, oh, okay, so PropTech. I'm like, no, not PropTech. Sorry. Why so? PropTech was mostly about property management and transactions in the industry. It's a huge market. It's very close, and there is a huge intersection with fintech. That's where agents are involved and so on. So construction, on the other hand, is whatever we touch physical. It's my also like that's why I also use the term RealTech or real estate technology. Real estate technology is more about building management. And currently, for instance, I'm extending the thesis also looking into energy sector. Again, intersection from perspective of construction and real estate technology. Those 3, like, I would say like real estate is everywhere, right? But again, construction technology, from my perspective, is something that physically can be done. Like, so it's contractor involved, it's, service being involved and so on. So it might be marketplace, it might be transactional, but again, the result, for instance, is connecting contractor to subcontractor who will do some physical work, even if it's maintenance of the building, even if it's like some, some estimation or something like that, like inspection, for instance. Again, I will consider this construction tech, not PropTech. PropTech is like, buy, sell, lease, and there is a huge things related to their mortgages, right? It's a huge amount of capital flowing. But again, if the capital is flowing towards mortgage, in majority of cases, it's also like a bucket of capital that goes towards like credit lines. So does it really
fall into the built and it doesn't fall into the built environment section. So
yeah. So that's why I differentiate like construction technology from PropTech. You will not find PropTech as a word in my messaging or on the website.
Yeah. So, interestingly enough, you worked in Russia, Germany, Singapore, and now in the US. So, I'm kind of curious to understand what are some of the patterns you've seen in these different continents, and if you have any takeaways from working and building in these economies.
Look, I think I cannot judge about partners because they change, evolve all the time, right? So I think like, for me, what's I prefer to say like, raising 1 million euro in 2009 in Berlin, Germany, worth $100 million in the Bay Area. Um, yeah. But again, it's all comes from my lens because again, like, think about it as a different, like in Germany, in Europe in general, Russia, the same to Singapore or Asia, because I travel a lot, like, to China, to Hong Kong. We actually had manufacturing in Malaysia. Um, Again, those ecosystems were evolving very rapidly, going through different cycles. Right. Hardware was a boom in 2014, 15, 16, until like Juicero failed in some other companies. I don't know if you remember those cycles. Like IoT was a thing, and so on. So like the markets go through the cycles, and meaning like, some of them go into to more advanced. And that was also the time when, let's say, Uber was scaling, trying to scale to Asia. There were a lot of copycats in different countries, like, India, Asia, and so on. Some of them survived, but why? Because they had like more domain, like local knowledge in terms of how to integrate into culture, right? Taking into account the cultural aspect, not just applying the same playbook that were in these companies. Um, and again, the ecosystem was evolving rapidly, right? Right now, it's a different cycle, so I cannot say about partner. I think I can tell like what strengthened me personally is ability to communicate and see differences in communication between different cultures. That's where, like, coming to the US, that's very culturally diverse, is probably is a good thing for me, because I already came here to build business, understanding like, what are these cultural differences might be. I'm still learning. I'm not saying like, I'm perfect in that, but my kind of like skill set that I have in the toolbox is probably like more uh, advanced.
So, as a founder, would you say building in these economies is difficult when you compare it to the US, or what's your take on that?
It's hard to say in terms of difficult because people are going to imply it like into themselves. I think it's very important to understand your strengths and weaknesses. For instance, someone who is obsessed about operational excellence and have a more engineering constraint-driven mindset, it's probably going to be way better to build something in Europe. Um, in certain states in the US, probably yes as well. But the reason for that are the following, right? So in Europe, most of the things are perceived as kind of like, okay, I think like let's put it this way. I don't like constraint driven thinking. I like more opportunistic driven thinking. Opportunistic driven thinking, like, let's think about the company coming from Europe and who were like successful in terms of product marketing in some scale in a European country. If they come to another market, let's say to the US, um, funny enough, they're not going to be as aggressive as someone local, opportunistic. But on the other hand, they're going to be already very good in operational excellence. Why? Because it's no other way they can survive in European environment. They need to be operationally excellent. They need to be conservative and constrained with certain things. They need to do their own due diligence in terms of, can we do this project? It's very different from in some cases US mentality, where like, okay, now we got the deal, let's figure it out. Right? That's a shift. I cannot say like, what's is it more difficult, or it's easier. Again, it depends on the personal kind of like, strengths in operational excellence. I think like in Europe it's going to be easy. But then if there is an ability to communicate it to US environment, probably it's also going to be easy.
What about Asia? Would you feel they're more risk averse than Europeans, or?
In Asia, I would say that there is again, I don't know, like, what's right now. Probably right now, economy and demand and focus of areas of focus are very different compared to what it was back then. And there was a certain things that were supported. Let's say, why Asia? Let's say, why for like in someone from Europe coming to Asia, or like US company coming to Asia. If they find out that the Asia might be better for them from product introduction perspective, manufacturing perspective, or some partnership perspective, right? For the rest, I would say like it's supporting just expansion to the local market, but again, that's more friendly for local founders. For local founders, another problem is right now maybe less of the problem, but previously it was like constraint on the financing, so where to find investors, because a lot of investors were actually deploying in Asia with the perspective of going after low valuations or jumping in when the company was like sub 1 million something, and you can get. Oh, and there was some in Singapore. There was incentives for foreign um, investors, um, and there was matching for the capital if they establish headquarters in Singapore, and the same was in Hong Kong for some time. So again, see the ecosystems are evolving, so the focus like shifting. The same you can see about French tech or Paris tech. It's in Paris, right? I think it's very strong, but it went through the certain style cycle. Like there was I think 8 to 10 years establishing it, and the focus was about like how they can attract entrepreneurs to come to the country and start building. And I think there's like in Europe, there's probably competition between like, Berlin, Germany, like Paris, France, London in the UK, or like UK in general. They're trying to attract this talent and entrepreneurs to build businesses. And that's the main competition what's happening. In Asia, the same. Like Singapore was trying to attract businesses to start the companies. Hong Kong was trying to attract entrepreneurs to start companies. And what they can offer someone who can have access to China, but at the same time being open to the rest of the world. Singapore, because of its unique location and environment, again, was offering something similar. But again, Singapore more on the financial side of things. I still think it is. Besides all other stuff, but on the other hand, like if you visit, have you been to Singapore? No, okay. But for those who've been to Singapore, let's say 10 years ago or even more, if they go to Singapore right now, they compare it to Dubai. It's like previously the perception of Singapore was like, oh, this is a city of the future. Now you go to Dubai and you think about Dubai as a city of the future. And I think all these like, countries and cities, like, new cities will go through these cycles. It's like, some will go up, some, it's again, like if it's comfortable for citizens to be the state and whoever is more successful attracting entrepreneurs, and entrepreneurs will bring changes, right? They cannot say like, I created 6 companies. Why? Because, it's happens naturally. So if you attract entrepreneur into the country, they will create something.
Yeah, I think the cycle point that you mentioned, that each country goes to this cycle, I think that is so true. And I would say what I've seen in India in the last few years specifically is mind blowing. Just not in terms of ConTech or real tech startups, but also consumer tech. Uh, like also the economy, like as a country is boosting entrepreneurs to like invent and innovate, but then there's also all these um, I would call it just kind of like Shark Tank shows, if you will. There's like a lot of people are openly talking about entrepreneurs and investing in them, making those bets, which was slightly missing probably a decade ago. So agree on the cycle part, but I also feel like sometimes, to your older point about culture, even though say if the company is a unicorn in one country, the culture aspect is so strong that even though they're unicorn, they couldn't apply plug and play tactics in the other economy. Like specifically for a country like India, where the customer to acquire customer, it is very difficult. And you have to be very price competitive. So, and also I feel like the needs in general, for talking about just construction, the needs of the industries and the companies there is very different than what we have here in the West. So I guess that's why the solutions don't really gel that well in a plug and play manner. But yeah, great points. um, I wanted to ask this for the longest time. So for Mighty Buildings, you guys raised almost $150 million overall in the 8 years from prominent VC firms like Khosla Ventures. Do you have any insights or stories from that pitch?
Yeah, I think it's mostly about the bold vision, changing the inefficient, like I wouldn't say like inefficient, but the industry that get used to do things in a certain way, with the vision of making it like using less material, less carbon intensive, and at certain point, certain scale, make it cheaper, or at least similar alternative to natural, the traditional way of doing things, net traditional materials. That was the ultimate vision, and it was like on track for multiple years. So um, yeah, that's again we believe in that. And I think like we were, I think, one of the few who believed in this with our vision. But again, it was mostly about our vision. Like we didn't care about other companies doing 3D printing or something like that. It was like we're executing this. We believe that material is superior in this case, and what we can do with the material is the most important thing.
Got it. Curious to know, like, since now you're on the other side of the table as well, do you have any tips for founders when they are raising rounds? How do they approach um, the investor? Give me examples for both when raising from a generalist VC and when raising from a ConTech RealTech VC.
Well, it depends on the league. I think one of the important parts about raising money is, first of all, have this vision and being able to iterate on this regardless of who you have on the other side. And if we speak about generalists, it's mostly about educating them and letting them know, like, why this future that you kind of believe in, and what are the pathway to go towards this future, and what are the signals for that. Again, it's more about like being able to speak opportunistic driven thesis rather than constraint driven. Because constraint driven typically it's good to have for execution mindset, very good engineering mindset, but for opportunistic driven, it's again, I believe that there should be 80% less material used in construction. I believe that it should be like way more thermal efficient compared to how it's done here, like in majority of cases. And I believe that it should be faster and the quality should be superior. Yes, and I have a formula for that. The same for the rest. Like, and it doesn't matter like what are the problems that are being solved. And another thing is ability to execute the frameworks and build the frameworks for customer acquisition or working with the customers. So in having this, it's I prefer to say that exponential growth is not like one model that's gonna superior, right? It's more about you building playbooks to work with certain cohorts and categories of customers, and then you stack them together. And if they grow, you get the exponential growth.
I'm kind of curious to understand how are the deals structured. Is it very different when you compare contact real tech deals with consumer tech? Is it
Well, in construction, as I said, like multiple stakeholders are involved, and it's very important for the startups to understand at what stage they are involved and what stakeholders they need to communicate with, and who is the ultimate decision maker and who is impacting the decision. So in some cases, some decisions might be made by architects or engineering firm, but they're not going to be ultimate decision maker. They will suggest the decision to the owner. They will present different different scenarios. So, for instance, we can build this building with SIP panels, or we can build these buildings with a traditional framing. And up to the owner is going to be to understand, like what will be the best way.
how does it affect in while raising money? I'm trying to understand that.
I mean, clear understanding of how approach the customers, being able to articulate the sales cycle, being able to show the pipeline, being able to show like what is how those leads are going through the pipeline, uh, being able to show the roadmap about go-to-market strategy. So, for instance, again, building this playbook and this like building playbook, meaning majority of cases saying no to certain type of customers, saying like, for the next 3 months, I'm onboarding 10 customers of this profile. I don't know, let's say contractors from with a revenue from 10 to 50 million. What does it mean? It means for sub 10 million and whoever like beyond 50, I'm saying no for now. However, as a founder, you speak with a lot of people and they will say like, oh, I know Bob. He's like in this contracting company. They might be interesting. And, do you want the introduction? And you'll say like, hey, yeah, thank you. It will be great to chat with them. But let me send you the note once we are ready. Right now, I really want to focus on this 10 to build the playbook and move to the next. Then you think like, okay, based on the learnings that I got from like, the Cougar and cohort, like what are the next cohort that I'm going to be building? Identify them, brainstorm with the team, start the work, again, build a framework, continue.
But doesn't it come against the opportunistic approach and it's kind of you restricting yourself?
No, the thing is, it's I like McKinsey's Three Horizons. Have you heard of it?
No.
No, Three Horizons is like, it's very, by the way, it's a great mindset to set within the team. So when you speak to the team, there are three horizons. So first horizon is and I think the example that McKinsey provided was about like, let's imagine that you're going on a hike on a hill. So first horizon is, and with each step you look and you see like there is obstacle. There is a tree, there is some, I don't know, like pivoting on a trail or something like that. This is your first horizon. You know where you're heading and you're just navigating with the local obstacles. Second horizon is like, let's say you see the top of the hill. So you know where you're heading. It's visible. You can describe what it's there. Third horizon is what you're going to see from the top of the hill. That's something that you can only imagine, right? So the third horizon is like, that third horizon is your ultimate vision that you're pitching to investors. Second horizon is kind of like, your next milestone to get to series from Series A to Series B and Series C. And the first horizon is kind of like, why you're still like here and you're executing it right, your ability to execute. So that's why it's not constrained. It's all like, one line. But again, like when you get to the top of the hill, you don't know what's going to be there. There might be another mountain. There might be a cliff. There might be unicorns. That might be, I don't know, like waterfall.
This is such a great analogy. I'm gonna make a note of it. I'm gonna read that after this. Um, Curious to know in terms of like realization of an investment, right? Contact companies are very different from your consumer tech companies. It takes maybe years to actually see the benefits of your investment. The pilots usually on construction projects takes few months to years to actually show the benefits, to actually show that return on investment. So as an investor, how does that affect your investments in terms of, say, if you're raising money from private equity or other individuals, how does that impact your pipeline?
You mean from founder perspective or from investor perspective?
From investors' perspective.
From investor perspective, when I look in the company, and there is always a path to like raise money for private equity. But in this case, the question we need to answer is like, is it the case where venture returns are going to happen? Because venture is typically built on portfolio. So we built a portfolio within 13 theses that we execute on a strategy, and we believe that a couple of companies, one company should be able to return the whole fund or the whole investment, right? So with private equity is different. With private equity, typically it's synergies, and the whole portfolio should have the value more that someone will be able to buy to acquire that. The different private equity strategies, but it's mostly betting on certain growth, which is different. The appetite for growth is different compared to venture. So I think venture route versus private equity route from founder perspective, it's more like, if you're confident that your third horizon is good enough for venture growth and you're able to communicate, you know how to attract capital. If you get into this like second horizon successfully, go for it. If you think that your third horizon is blur, you're not able to articulate it right, your second horizon is kind of like not questionable. It's like, guaranteed you get in there to in a certain pace, and like downside scenario is still like you get in there. I would say like it doesn't matter, like, it's probably might be better to get from traditional financial institutes or private equity, because in this case, you'll get money to execute. By the end of the day, building business is great. Just build business.
I'm also kind of curious to understand. So you've invested in like how many companies right now as a part of BuildTech VC?
I think 18.
So is there, like you mentioned, having a theme for investment? So do you have a theme across this portfolio, or is there any other industry that you're kind of like bullish on? Okay, this is going to be next 5 years, maybe hardware is the thing to go and not software, something along those lines.
I look into manufacturing right now, but again, from construction and real estate technology perspective, for instance, energy supply, some automation, but automation from perspective that can be later on used in prefab. Because if you think about prefab, it's manufacturing, right? How you organize process, it's just a product, what is different. And there are many use cases like that. So it's not specifically to be, focused on manufacturing on assembly lines, because some of the manufacturing processes that happen in prefab is actually just assembly.
In terms of your investments, apart from the companies that you've invested in your portfolio, are there any other startups that you've come across which you see like, oh wow, this is interesting, I haven't seen something like this? Or even not just startups, like even a different type of business model that you've seen?
You mean specific examples?
Yeah, I mean anything, I mean whatever comes top of your mind in terms of maybe business models or companies which are doing something different that you haven't really seen often.
Well, in my mind right now, I'm kind of contemplating between those who've been successful and those who are like trying to validate. I'm more focused on pre-seed and seed, like, in some cases Series A. But for pre-seed and seed, it's typically like a well bet on certain business models. Um, like, I don't want to provide specific examples because they're still early. I think what's important in some cases, to think about is in construction also specifically, those companies who are talking, let's say, infrastructure or like some heavy, like infrastructure, for instance, like power purchase agreements should be done for like 20, 25 years. How for the startup to squeeze in with such a commitment, right? So one of the ways of doing it is just to understand how to structure, to be creative in terms of structuring the agreement, a joint venture or something like that, their participation in this agreement. And it's more about like, the business model, how they can be creative with the business model. I think, but the flip side of this is saying that technology is already there. It's ready. It's more of a question on how to implement it. What business model going to be supportive for this business model to strive? What is technology to strive? Sorry. That's how, like, infrastructure, because in the majority of cases, we can see that there is plenty of technology that's available, but infrastructure is just not ready for this to be successful. Supply chain, like, like energy supply. If we speak about hydrogen, there should be hydrogen supply. For the batteries, there should be like enough energy, and the utility should be able to withstand such capacity. Those are the challenges, right? The EV market, for instance, is a good example. Like the same for hydrogen is also another example that haven't survived the B2C market, but quite good in B2B for trucks and for buses and for other type of fleets.
So you mentioned pre-seed and seed. As an investor, what are some of the things that you look at when investing?
Founding team and their mindset.
So just bet on the founder.
Yeah, betting on the founder mindset, understanding the framework of what they're building. So they build the frameworks. Third one, probably what I'm looking for typically is evaluating if the founders understand the gaps they have and that how they see the future of the company. So it's not like something like two founders or one founder will build it all. And the third one that we use as a rule at BuildTech, we typically pilot the company. We find that someone within our network to pilot the solution before we make the investment decision. So that's kind of like market validation coupled with the healthy sort of like founder uh, material within the company.
And how much of is the involvement of an investor when a founder is trying to come up with a new feature or a new sister product or something along those lines? Or is that answer depending upon how much equity the investor has, or does that not matter?
Yeah, I think on early stage, I would say investors should not be that involved in the process um, until the late, and probably at the later stage when the board is formed and there is a bigger voice in the room for from investors. The consensus should be done around like investors back the company based on the certain thesis, and the board will decide if the plan that's being proposed is against the vision or the vision is already obsolete and the company is pivoting. What the board will prevent from doing, like, for founders being so, like, they're tired of certain things that they were building, they kind of like come up with a new idea, they want to go out of a new idea. That's probably time to departure.
Got it. Any final thoughts for founders who are building companies or raising money? Any 2 cents of your wisdom that you want to drop?
I think one important part is for founders right now is also to build ecosystems around them.
What do you mean by that?
I mean, building people and building partnership and relationship around them, around the company, that will fuel the company in the future. It's sort of like, doing the flywheel that's going to pay off at certain time, uh, while being able to execute, building these frameworks to get to the second Verizon, and after they see the second Verizon, like convert the third Verizon to the second Verizon and continue building. So that's, I think, like, one of the most important parts is also it's sort of like going on this hike, not alone, but with a group of people, and making your second, third horizon visible to them, and making sure that they can articulate with that. And at a certain point in their head, it should be, oh, I know this company, I can make this introduction, or I can help them with this type of business, and so on, and pull the trigger. That's very important. So that's why, for instance, it's very important to keep everyone updated, be it like any engaging format for keep investors and advisors updated. Might be like a newsletter, but it should be really engaging, not like regular spreadsheet report or something like that with 5 numbers that they're reporting.
Yeah. Alexi, this was super insightful. If someone has to reach out to you, what's the best way?
LinkedIn, again, feel free to reach out. Tell me why you want to, if you're looking for advice or you want to share the company. I will try to respond, but in some cases I may be overwhelmed with the messages. But within the week, I typically get back. If I missed the message, there might be a scenario that I'm just not interested or overwhelmed with other stuff. But yeah, please don't be upset.
Perfect. Alexi, thank you so much for taking out time to do this. I personally learned a lot, and I hope listeners take out some value as well from this.
Thank you, Sidhan.